Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeezes. Today, we're putting a specific company under the microscope, one that's been flashing bright red on our hard-to-borrow screener, Token Cat Limited, or TC. This stock presents a really intriguing setup, but as always, we need to understand the mechanics and the risks involved. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on Token Cat Limited, trading under the ticker TC. This company, formerly known as 2NG, operates in the communication services sector, specifically within advertising agencies, with its core business as an omni-channel automotive marketplace in the People's Republic of China. They also dabble in electronic equipment trading, technical support, and consulting services. Currently, Token Cat Limited has a market cap of approximately $58.04 million. Looking at recent price action, it's been a challenging period for TC. Today, the stock is down 7.92%, and over the last 5 trading days, it's fallen 5.15%. Even more significantly, TC has seen a steep decline of 75.20% over the last 30 days. Show chart TC price action over 30 days. What is cost to borrow and why it matters? So, what exactly is cost to borrow and why should you care? When a short seller wants to bet against a stock, they first have to borrow shares. The cost to borrow, or CTB, is the annualized fee they pay to borrow those shares from a broker. Think of it like an interest rate. When a stock CTB is lower, it means there's plenty of supply and little demand to short, or a low risk perceived by the lenders. But when that fee starts to skyrocket, it tells us a few critical things. Either there is a huge demand from short sellers to borrow the stock, or the supply of shares available to borrow is becoming extremely scarce, or both. These fees are annualized, meaning an 865% fee might sound astronomical, but it's the annual rate. Short sellers pay a daily fraction of that. Still, very high CTB can erode short sellers' profits quickly, or even push them into a loss if the stock doesn't fall fast enough. Why this stock is hard to borrow right now. Now, let's talk about why Token Cat Limited TC landed on our hard-to-borrow screener. The numbers here are truly eye-catching. TC currently has an annualized cost to borrow fee of a staggering 865.8%. Highlight number, 865.8% CTB, that's exceptionally high. What's even more compelling is the momentum behind this fee. Over just the last 5 trading days, TC cost to borrow has surged by an incredible 810 percentage points. Should chart CTB momentum, this massive jump indicates a sudden and intense scarcity or demand. Compounding this, the shares currently available to borrow are extremely limited, a mere 15,000 shares. When you consider TC estimated float is 99.5 million shares, having only 15,000 available to borrow is a tiny fraction. This extreme scarcity and soaring borrowing costs are precisely why TC stands out as a hard-to-borrow stock. Squeeze mechanics explained. So, what does it mean when a stock is hard to borrow and the CTB is so high? It sets the stage for what's known as a short squeeze. Imagine a short seller who borrowed shares at 865.8% annualized and sold them, hoping the price would fall. If the stock price starts to rise, even a little, these short sellers are under pressure. Why? Because the losses increase as the stock goes up, and they're also burning cash daily on those high borrowing fees. If the price rises significantly, or if their broker demands more collateral or margin call, they might be forced to close their short positions. To close a short position, they have to buy back the shares they initially sold. This forced buying creates demand, which pushes the price even higher, trapping more short sellers, forcing them to buy back shares, and so on. This creates a feedback loop, hence the squeeze. Dilution risk check. An important factor in any potential short squeeze thesis is dilution risk. Dilution occurs when a company issues new shares, like through an S-1 or S-3 filing, increasing the total number of shares outstanding. While it might bring in cash for the company, it also dilutes the value of existing shares and can completely negate a short squeeze, even if the cost to borrow is sky high. More shares available means it's easier for short sellers to cover, and new shares can also be borrowed, alleviating scarcity. For Token Cat Limited, we have good news on this front. Our check found no recent dilutive SEC filings such as S-1, S-3, or 424B in the last 90 days. This means the existing float remains largely stable, which is a positive sign if you're looking for a short squeeze setup. We also found no recent reverse splits in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Despite the extremely high cost to borrow and shrinking supply, it is crucial to remember that a high CTB does not guarantee a squeeze. It can also mean that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Our internal composite squeeze score, which factors in multiple indicators including CTB, momentum, borrow supply, and technicals, currently gives TC a score of 43.7 out of 100. This is in the mid-range, suggesting some potential but not a screaming buy signal. Another critical factor for any squeeze is volume. Today, TokenCat Limited traded 285,300 shares. Compare that to its 30-day average volume of 2,900,010 shares. That means today's relative volume is only 0.1x its average. Show volume bars for a short squeeze to really ignite. We typically need to see a significant increase in buying volume, sustained price momentum, and further contraction of available shares to borrow. Without the buying pressure, even with a high CTB, a stock can simply continue to drift lower as short sellers remain comfortable in their positions. TokenCat Limited TC is undoubtedly a hard-to-borrow stock with a dramatically high and rapidly increasing cost to borrow, coupled with extremely limited borrowable shares. This combination signals significant stress for existing short positions, and the lack of recent dilution removes one common headwind. However, the stock's recent price performance and current low volume suggest that the catalyst for a squeeze isn't yet in play. Keep an eye on borrow availability, and watch for any increase in buying volume if you're tracking TC. If you found this deep dive helpful, please hit that like button, subscribe for more content on hard-to-borrow stocks, and let us know in the comments what other tickers you'd like us to analyze next. Thanks for watching.